The utility sector outperforming so far this year, closing out its best May since 2003. But for investors looking into the defensive sector, traders may find a fresh perspective of opportunity with utilities. We're looking at how to navigate the big picture with the Yahoo Finance Playbook. Bret, Kenwell, eToro, U.S. investment and options analyst, along with Sophie, Karp, KeyBanc Capital Markets equity research analyst, joining us now to discuss. Welcome to you both. And Sophie, I'll start with you. We're actually, Sophie, at the start of the show, we were talking to Michael Kantrowitz from Piper, who likes utilities, and we were asking him why, and he referred to them as sort of the Iron Man of the stock market, Sophie, in the sense that you're kind of playing offense and defense when you're in the utilities. You agree with that, Sophie?
Well, thank you for having me. And well, I obviously like utilities. We are bullish on the space, and we have been bullish since the start of the year, and even from before the start of the year. And I think with the AI rush sort of emerging here, I would refer to it as, we have this gold rush, and utilities power companies are the ones who are selling shovels into this gold rush. And so I think it's an excellent way to get exposure to this trend, of course. And it's a way that also offers defensive characteristics because of the nature of this non-cyclical nature of this sector. And it's historically still inexpensive relative to where utilities historically traded versus bond yields and versus the S&P 500 as well.
Well, and kind of to Sophie's point, Bret, what's interesting here is, as the market more broadly has come to this higher for longer realization, normally that would not necessarily be a great recipe for utility stocks, right? But because there is this alternative narrative now about AI, they have been supported in a time when maybe they wouldn't otherwise have been, right?
Yeah, I believe that there seems to be a sort of multi-catalyst approach to utilities at the moment. They are typically a more defensive sector, but right now we have the AI catalyst helping to fuel the recent gains. And while the idea of interest rates, or at least lower interest rates, have been pushed back, I think investors still have that on the front of their minds. And when you look out over the next, say, 6 to 12 months, the expectation is pretty clearly that the Fed will be cutting interest rates. And between that and AI, it's a kind of a unique catalyst, I think, for utilities. And it's part of the reason why it's performed so well this year.
Sophie, bring back to you. We've had a number of strategists, Sophie, come on the show and pound the table for utilities. It's not a new theme, and investors have bid them up. Broadly, when you look at the sector, Sophie, do you consider it still, attractively valued here?
Yeah, we do. I think when we look at the valuation of benchmarks where the sector trades versus the S&P 500 versus bond yields, like I mentioned, I think it's still historically inexpensive. It's outperforming now, but look at the slightly longer chart, and we coming off like a year or two of underperformance versus all the major indices when the cyclicals were outperforming and utilities were essentially flat or down. So in my mind, we're just in the beginning of this reset for the space, and the trend is real. Like it's visible in the power prices where there's merchant market for power. Power prices are at levels we have not seen in a very long time. For the first time in like a couple of decades, probably, we're seeing actual growth in power demand in the U.S. I think it's a really big change. It kind of shocked people into realizing that the space has a lot of potential.
I guess my big question when it comes to that increased demand, and Bret, I'll take this one to you, is whether the power companies can meet that demand, especially if it continues to go up because of these data centers, for example. Can the grid take it? Are these companies going to need to make big new capital investments in order to keep up?
They may need to, but back to Sophie's point, I think that the group is still, even though it's had a big run, it's still attractively valued. And even though we've had sort of this giant rally, whether you look back over the last few weeks or you look back, year to date, or even all the way back to November, even though some of those catalysts might require more investment from those groups, the earnings expectations are still pretty strong, and the valuation hasn't gotten out of control especially compared to where it has been over the last few years. And so I think when you look at sort of the bigger picture for utilities, it still remains attractive, even with all of those considerations at hand.
And Sophie, it's a good question, so I want to get your take too, whether power companies can meet this demand, just given AI, crypto, EVs. What do you think, Sophie?
Yeah, and I think it's for sure they can, right? It's just a matter of how well aligned the timing of that is going to be with the how fast the AI and the tech industry wants it. And I'm not sure what the tech guys are projecting here, but it's possible to build generation relatively quickly in certain places in the U.S. And I think it takes probably a couple of years to build a gas plant. It takes a couple of years to build a solar or wind plant. And we see a lot of, and because the U.S. is not a centralized grid, we kind of see that naturally tech customers are gravitating towards the places where there is capacity right now. And so we're not actually seeing, right now a situation where power demand is not being met. So there are definitely places in the country where there is capacity available, and there are some places that are more tight, right? So, for example, Northern Virginia, that's been a data center, heaven for a very long time. They may have to wait longer if they want to interconnect there. But anywhere in the country, like in other regions, that can be accomplished faster. And what we're seeing is its customers spread out.
And Sophie, just quickly before you leave, are there particular utilities that you think are best positioned, either because of where they're located or their cost of power, for example?
Yeah, I think definitely data center customers tend to triangulate, like they want cheap land, they want affordable power, they want time to market. And from that standpoint, we would flag as the southeast of the U.S. And they also want access to fiber, right? So when you overlay all of these factors, you have advantage in sort of the southeast, and we would flag Georgia, potentially other southeastern locations, right? So that would be Southern Company that benefits from that. And we would flag like middle of the country, where one of the largest publicly traded companies is Xcel Energy, XCL. So that's another area where we see potentially influx of data centers. And of course, the usual suspects, Dominion Energy, who services Northern Virginia territory.
Sophie, Bret, great discussion. Appreciate your time. Thank you.